The ROI Equation, Investing in What Truly Drives Results. Written by Silas Mary. Narrated by Archie. Introduction: Redefining ROI in the Modern Age. In the world of business and personal development, few concepts are as universally embraced yet as profoundly misunderstood as ROI, return on investment. It is heralded as the ultimate litmus test for decision-making, often invoked to justify actions, prioritize projects, or evaluate the worth of an initiative. Yet, despite its ubiquity, ROI has remained a narrowly defined metric, constrained by financial calculations that fail to capture the full spectrum of value creation in today's dynamic world. It's time to ask a critical question: what if we've been measuring success all wrong? The traditional approach to ROI focuses heavily, if not exclusively, on tangible financial returns. A company invests in a new product line, calculates the revenue it generates, and determines whether the investment was worthwhile. A professional considers spending on a training program, assesses the salary bump it might lead to, and decides whether to proceed. While this model is useful in some scenarios, it falls short in a modern economy where value is increasingly driven by intangibles: innovation, relationships, social impact, and sustainability. This book, The ROI Equation, Investing in What Truly Drives Results, is an exploration of a broader, more holistic framework for evaluating success. The journey begins with a bold premise: ROI must evolve if it is to remain relevant. The metrics we've relied on for decades no longer suffice in a world defined by rapid technological change, rising social consciousness, and the growing importance of non-financial factors in decision-making. The limitations of conventional ROI. To understand the need for a new approach, consider the pitfalls of the traditional ROI model. At its core, conventional ROI measures the ratio of net returns to the initial investment. It is a simple and elegant equation, easy to compute and interpret. However, simplicity can sometimes be a double-edged sword. The short-term trap. One of the most glaring flaws in traditional ROI analysis is its inherent bias toward short-term gains. Companies under pressure to meet quarterly earnings targets often prioritize investments that promise immediate returns, even if they undermine long-term growth. For example, cutting R&D spending might improve short-term profitability but jeopardize future innovation. The intangibles problem. Traditional
Sample complete. Ready to continue?